Hello everyone, PS from PS Invest Plays here today. Since March 2020, Square stock had risen more than 600%, but since August 2021, it has shed 16%, and year to date, it has risen only 2%, whereas S&P 500 has risen 25% in 2021. Many analysts think that it is still overvalued. Is this true? Or can we expect higher stock price in 2021 and beyond? In this video, we will understand its business, its financials, its future growth outlook, and review its chart using Elliott Wave to see how we can make money. So stick around. I think you'll like what I have in store for you today. Square, ticker SQ. Square is an American financial services and digital payments company based in San Francisco, California. The company was founded in 2009 by Jack Dorsey and Jim McKelvey and launched its platform in 2010. I had covered Square a couple of months ago, and you can watch my video by clicking on the link in the top right corner. In the previous video, I had covered why Square is a dominant force in the fintech business and why it is poised for secular growth in the next decade. I continue to believe in the growth story, and I will explain why. Square is a leading consumer and business finance app. It recently strengthened its consumer ecosystem with Afterpay acquisition. It allows the company to gain access to a massive buy now, pay later BNPL market. Worldwide, BNPL spending is expected to reach $680 billion by 2025, up from $353 billion in 2019. It represents a remarkable CAGR of 11.2%. Afterpay is expected to post pre-acquisition revenue of $1 billion in fiscal year 2022. BNPL market is still highly fragmented with gargantuan opportunities ahead. Square's core revenue segments, transactions and subscriptions, and Bitcoin revenue have strongly underpinned its top-line growth. Transactions and subscriptions have grown remarkably over the last 3 years. It posted a 3-year CAGR of 36.1% in fiscal 2021. However, Bitcoin's revenue growth was breathtaking. Therefore, Bitcoin revenue skewed Square's revenue growth trajectory to the upside. Bitcoin posted an eye-popping 3-year revenue CAGR of 320% in fiscal 2021. Given such a sharply bifurcated growth trajectory, it is vital to analyze the quality of Square's key revenue drivers. The growth of its core revenue segment has been consistent. In addition, its omni-channel approach has driven predictable growth for Square. That's all good. However, you might need to be more cautious when observing Bitcoin revenue. If you invest in Square stock, you should be prepared for volatility in its Bitcoin segment. For example, if you compare quarter over quarter, Bitcoin revenue saw a decline in its recent quarter. It is largely due to Q2's slump in Bitcoin prices took out a lot of investors' optimism in Bitcoin. For context, Square's Bitcoin revenue fell 22% in fiscal 2021. Bitcoin also accounted for 69.4% and 58.2% in Q1 and Q2 revenue, respectively. Therefore, it's a significant driver to Square's top line. When we consider the cost of revenue, Bitcoin costs were significant. Gross margins are razor thin, only 2%, compared to its core revenue segments where it has 57.7% margins. Moreover, we need to look at Square's business model in perspective. Square targets Gen Z and millennials. A study found that 94% of crypto buyers are Gen Z and millennials. Reaching out to them through Bitcoin could help to drive significant momentum. It's what drives the flywheel for Cash App. It helps to magnify Cash App's adoption, which drives its higher margin merchant ecosystem as well. Bitcoin is a mainstay of Square's super app ambition for its target customer base. Therefore, I don't see Bitcoin's association as an issue here. I think it's necessary to sustain Square's ambitions. Millennials and Gen Z accounted for 42.3% of the US population in 2020. It amounted to about 139.3 million people. Therefore, it's an important market for Square's business model. Strategies or acquisitions that can help it to monetize its growing user base better is crucial. eMarketer estimated that Cash App MAU or monthly active users would reach 39.7 million by the end of 2021. Square MAU grew by a phenomenal CAGR of 72% from fiscal year 2017 to fiscal year 2020. However, it is expected to slow significantly this year. Its MAU is estimated to increase by just 10.3% year over year. Therefore, it represents a significant slowdown against historical growth rates. It's also slower than 2020's year-over-year growth of 50%. In truth, Cash App's MAU growth seems to be slowing to a crawl. Nevertheless, Cash App MAU would still account for only 28.5% of the US Gen Z and millennials population. Therefore, I think there are still massive untapped opportunities. Square needs to find more inroads into the various consumer segments within this market. Despite Cash App's dramatic MAU slowdown, you should not look at such metrics from a single dimension. Instead, you must consider how well Square has been able to drive platform usage, despite its slowing MAU growth. That's even more important as I cannot expect Square to continue posting such gangbuster MAU growth moving forward. Instead, it is expected to get even more challenging. Square has been able to drive strong gross payment volume (GPV) growth. GPV grew by 56% year over year in Q1 2021. Hence, Square's monetization machine hasn't slowed down. While you should note concerns over its slowing MAU growth, you should not be unduly worried about it. The recent TikTok collaboration would likely help Square to boost its monetization opportunities. TikTok was the most downloaded app in 2020. It's also continuing its lead in 2021 and was also the most downloaded app in August 2021. 48% of US TikTok users are Gen Z and millennials. Their combined spending power amount to almost $3 trillion. Therefore, Square's opportunities are certainly in the early innings, as it has shown that it's serious in cementing its leadership within Gen Z and millennials. Looking at the financials for Square, revenue, gross profit, EBITDA, net income, EPS or earnings per share are extremely good. If you discount 2020 and compare 2021 financials with 2019, they have increased by a very good clip. In the chart on the right, free cash flow or FCF currently stands at $1.29 per share. Based on the current stock price to FCF ratio, the stock is in line with historical averages. In the chart on the left, price to earnings ratio (PE) is slightly on the higher side. Square stock is currently trading at an EV forward EBITDA of 97x. Compared to the valuations of the legacy players, Square stock is not cheap. However, its EBITDA is expected to increase by a CAGR of 32.3% over the next 5 years. Therefore, it's still expected to grow rapidly. I think Square stock still has huge potential for growth. Therefore, I would recommend that you should consider the current price and any further pullbacks as an appropriate level to add exposure. This is also indicative in the charts where I see the stock price to increase considerably in the next 3 to 4 years. Now, let's look at the chart of Square. Sorry for the interruption, but I wanted to remind you that if you like this video, please don't forget to subscribe, hit the like button, and hit the notification bell icon so you're notified when I upload a new video. With that said, let's resume our analysis. Looking at the chart for Square, the bull run that started way back in 2016 is still not over. It has completed its first 4 waves and currently it is in its wave 5. If we look deeper in wave 5, we can see that it has completed its first wave and wave 2 is in progress. I expect strong resistance around $215 and strong support around $206. This to me is the excellent buy range for Square. After this pullback is completed, I expect wave 5, the primary wave 5 to resume, which is typically 61.8% of waves 1 to 3, giving us a final price target of $362.75, which translates into 73% profit in the next 3 to 4 years. Now, let's summarize. The current stock price offers excellent entry point. Nibble any pullbacks and accumulate corrections. I see strong resistance around $215 and support around $206. I advise holding Square stock for the next 3 to 4 years as I expect a price target of $362.75, which translates into 73% profit in the next 3 to 4 years. What do you think of this analysis? Please leave me a comment and let me know. As always, please don't forget to subscribe, hit the like button, and hit the notification bell icon so you're notified when I upload a new video. Until then, bye-bye.